I popularized the term "nothing stops this train." I was talking about like fiscal deficits. It's because we can't agree on how we're going to balance things. So this error just keeps spilling out as we fail to agree with each other. And in a Bitcoinized world, that can't really happen. If one central bank does things improperly, and that central bank, the Bank of England, did in World War One, they literally lied and cheated about how much money they were printing. They rug pulled not just their own citizens, as the global was occurring to the time they rug pulled.
How does Bitcoin then come into the picture? Is it a viable solution?
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Alden talks about why Bitcoin has no brakes. We'll explore her bold insights. Stick around to see what's ahead.
So I think if we imagine the platonic ideal of money, it's a perfect ledger that can't be corrupted, and we can just like beam it to each other. We can just teleport it around. There's no friction. Yeah. Now, obviously, the platonic ideal does not exist. So the question is, how do you get as close as possible to that? Yeah. I think in obviously the current era, the closest thing we have is Bitcoin, and that actually gets quite close to the platonic ideal. The fiat system, there's no option. Like for Bitcoin, if you were operating in any sort of economic sense, you need a bank account, and every bank that exists by permission of the central bank and the governing body. And so you have this big closed source, fully centralized stack, and trust was mandate. You had to trust. And now at least you have the option to say, who do I trust and under what circumstance? Running a business, getting a paycheck as an employee. I mean, we see them when people are debanked. It makes hard to function in the modern society. And that's something that prior to Bitcoin, there kind of was no answer to. And now there's an answer to it. And, these systems aren't designed so that every single person is, say, fully sovereign for every transaction they ever do in their life. But they always have the option to kind of fall back into more self-sovereign aspects when they feel like they need to, or they always have that optionality.
Bitcoin and the broader crypto market took a hit after U.S. President Donald Trump made a bold statement about Iran's supreme leader. Trump claimed on Truth Social that the U.S. knows exactly where Ayatollah Ali Khamenei is hiding, calling him an easy target, though he clarified there were no immediate plans to act. The comment stirred global tension and spooked investors already uneasy over the escalating conflict between Israel and Iran. Following the post, Bitcoin dropped from $104,310 to $103,553 in less than an hour, before slightly rebounding to $105,450. Ethereum and XRP also slipped around 1.3%. The broader sentiment across the crypto market turned cautious, as the Crypto Fear and Greed Index dropped from greed to neutral for the first time in nearly 2 weeks. Analysts are now watching closely to see if Bitcoin can hold above the key $100,000 level. Some warn of a deeper correction, potentially down to $93,000, while others believe the current support levels are forming the base for a stronger rally ahead. With institutional momentum still in play, the market's next move could depend as much on global headlines as on technical trends.
Gold is now useless, but much like how gold was kind of treated as the backstop for the equities and financial markets, I think in a digital world, gold's kind of the backstop. If people have, what about tail risks of everything going offline or something? People do like the physical aspect of having, say, gold in their house or whatever. So it's not to say that it's useless, but it doesn't serve that same purpose of really trust minimize money. Yeah. And even Bitcoin gives us totally new things you can do with it. Like you can do multi-sig custody and split your keys on multiple jurisdictions, so that even technically a nation state has trouble getting to it in any sort of direct sense. Yeah. Whereas with gold, and this is really any real world assets, even if you put something like a blockchain on top of it, it's still tied to where's the actual custodian held, what is the legal chain that works there.
The Oracle problem, right?
Yeah, and like for example, and people often say, well, why can't you make like a gold-backed crypto? And it's like, well, they've existed for years. There are gold stable coins. There's a market demand for them. It's not very big, but it exists. And I can imagine, for example, if you want to, have access to gold, but you're in an environment where it's hard to get physical gold. You can't get the gold ETF. You can at least get this, semi-trusted chain of custody to hold that gap for you. But it's opening the same problem that they ran into time and time again. The most credible way we have to get past this period of centralization. So for about 150 years, we've been in the period where, going back to my prior point, transaction speeds were speed of light, physical settlement was still slow. We finally invented fast settlement. Satoshi and all his predecessors finally figured out fast settlement.
Yes.
And then, we're kind of watching that catch on. It has to go through the massive network effect. It's up against the $100 trillion network effect of the dollar, the multi-$100 trillion network effect of fiat currencies globally, the whole global bond market, and all the governments tied to it. So this little open source thing is kind of doing this multi-decade path through this very entrenched system. It's gradually succeeding. It has things to navigate. It had to, navigate big countries trying to ban it and then figuring out they kind of can't ban it. And, politicians realizing that there's nothing to gain really from donors or anyone else, from voters, for being anti-Bitcoin. But there is a lot to gain for being pro-Bitcoin. And so it's kind of going through that game theory over time. There's a couple countries that are ahead of the curve and say, well, if other countries are going to be slow and even anti, we're going to be the ones that embrace it. It still has to go through some challenges. Like, if we do have, quantum computers, it's got to be able to make that change. And that has implications for signature types and potentially even block size issues with the length of those new signature types. So it has to navigate still, I think, some challenges ahead. But it's by far the best chance we have. And it's something that it's kind of fundamental. Like even if society were to rerun this whole modernization period multiple times, kind of like how the bicycle would always come before the car, would always come before the airplane, because basically you kind of have the predecessor stuff kind of built into it. We always would have Morse code before we have something like Bitcoin.
Sure.
And, Morse code could be called different. It could have a different, alphabet equivalent, but it still is basically Morse code. Kind of like how Bitcoin wouldn't necessarily have the exact parameters it has now, but something like Bitcoin, if it gets to this period, would eventually emerge. And I think we want it to succeed on the first try rather than have to kind of start this project all over again.
Bitcoin dropped 5.5% last week, slipping from $110,000 to just under $106,000 as geopolitical tensions between Israel and Iran split global markets. The fear triggered a risk-off reaction, pushing traders to take profits and scale back. But while the headlines focus on the dip, something far more bullish was happening behind the scenes. Institutional investors were quietly loading up. Spot Bitcoin ETF saw another strong week, bringing in over $1.35 billion worth of BTC, roughly 12,662 coins. BlackRock led the charge, adding more than $1.1 billion through its iShares Bitcoin Trust. Ethereum wasn't left behind either, with ETF adding 191,057 Ethereum, driven again by iShares with over 138,000 Ethereum bought. Big names like MicroStrategy and Metaplanet also jumped in, acquiring more than $1 billion in Bitcoin combined. On the Ethereum side, whales and firms like SharpLink added hundreds of millions in Ethereum, even as prices wobbled. Meanwhile, USDT and USDC supplies surged, especially on Tron and Ethereum, signaling growing liquidity in the market. On-chain activity painted a mixed picture. Layer 2 Base saw user activity surge, while Avalanche posted high transactions but fewer active users. Ethereum held steady in total value locked. Despite market fear, the broader crypto story remains bullish, with institutions betting big that the next leg up is coming soon. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.